ultimate beginner's guide to trading crypto. Now, whether or not you have been in this market for days, weeks, months, or years, or if you've ever traded before, stick with me here throughout this entire video because we're going to be breaking down the proper way to use charting technology like TradingView, how to identify the trend that you're in, what signals you should be looking at, and a great guide to identify market cycle tops and market cycle bottoms. Far too many of us have too much ego. We put this beyond, we go, we already know this, we already know. We're going to take a break here. We're going to practice some humility. Today is the perfect day, whether you're watching this live or you're watching this 3 days, 3 months, or 3 years in the future. I'm going to break down exactly what you need to do to identify how to take profitable trades and know where you're at in not only a market cycle, but a trend within that market cycle so we can make some money and stop chopping ourselves out in emotional moves in this market. Because it's days like this where you're seeing red if you're a bull that mess you up. And it's days in the green where the bears get completely jacked up. People get caught in traps in both directions. So every single one of you, let's practice a little bit of humility today. Again, whether you are new, whether you've been around for a while, I guarantee you're going to learn something here today. Welcome to the show. Welcome to the stream. My name's Kellam here with BitLab Academy, and I'm going to break down exactly what you need to do to stay on the right side of the trend. Let's jump in first things first, and that is looking at the most basic tool ever. And that is coinmarketcap.com, getting a general landscape of where we're at just in general in the crypto ecosystem. We want to look at a couple key things. First up is the market cap. This is a market cap, the total market cap of every dollar in value that is in the crypto ecosystem. And by tracking this, it gives us great insight as to where we're at in terms of moving in a bullish trend in general, if we're in a bearish trend in general, or if we're in a potential distribution or accumulation. Accumulation would mean a potential setup for price action moving higher, accumulating before the move up. Distribution would be sideways action that other indicators beyond just our hopes and dreams, other indicators are signaling we might be in an area of weakness that may be setting up for price action to move lower. Now, one of the main things we need to pay attention to here is not just this, it's understanding this list right here. This is not listed by favorites, by what is coolest, what is talked about most. No, this is where the dollars are voting in the crypto ecosystem. We're looking at this right here. This column is the market cap. Market cap, what is it? Well, we see Bitcoin's at over $2 trillion. Ethereum is at 300 billion. We see Tether at 155 billion. We see XRP at 125 billion. What do you notice of what I just called out? These are listed, the ranks here in terms of where they're listed on this ranking based on how much money is in this ecosystem. Now, that's a very basic thing. I just want to make sure everybody understands this. Beyond this, when I see people navigating around on crypto Twitter, crypto YouTube, or even talking to people, somebody claims that they're an investor, they claim that they're a trader, and then they say, where can I buy that? You're telling me that you're not in this market without telling me you're not in this market. Come up here on coinmarketcap.com or CoinGecko in the search field, and you can type in anything. Let's look at Aerodrome. You come over here, you type in Aero, click on this, and you get some key information that you need in any asset. If you're investing, if you're trading, you should understand where to find the most basic of due diligence. And stick with me because we're going to be breaking down some trends. We're going to be breaking down signals, and we're going to be breaking down how to identify trades here in just a couple minutes. We got to start with some basic fundamentals. Refresh even if you think you know. Let's refresh some of these things. Well, first up, we have Aerodrome Finance right here after we search for it. And you have these tabs: chart, markets, news, yield, analytics, about. Well, chart, we can see we have on this chart, this is on the, let's see, this is on the 1 day, this is on a 3-month chart. Is this, oh, this is all. Okay, so this is on all. We go to 1 year. You see up here on the top right, we go to 1 month. You're getting the time frame of what the chart did just in general on a line chart over the last 1 month, 7 days, so on and so forth. Now, where do I buy it? I like Aerodrome. I like Uniswap. I like Ethereum. It doesn't matter what the coin is. You come here and you click on markets. Boom, it shows you where you can buy whatever that asset is that you are looking for. So let's look at another one. Another one we really like here, at least on our channel, and we think is going to have some nice movement. And even if it doesn't, we want to come up here, Constellation DAG. Okay, another made in America coin. And look at this. We pull it up. Now we can see, where can I buy it? On markets, it's on Uniswap, which is a DEX, MEXC, Gate, KuCoin, BingX, Bitmart, etc. Now, the other area that we really want to pay attention to is this information right here on the top left. And this is basically the market cap, the fully diluted value market cap. This would be if every token that is expected to be out was out today at today's price, what would be the value of that? What would be the market cap? That's the fully diluted value. Total supply, volume divided by market cap, and then of course 24-hour volume. We can see a lot of different metrics here. I just wanted to give you some basics so you understand how to navigate the most basic things, because we're about to jump in to trends, to signals, to market cycles, to entering trades, to exiting trades. And if you don't even know how to find where a coin is, well, then you need to take a humility pill and a bite of humble pie, because you're putting the cart before the horse. I know we got a lot of people tuned in right now, and a lot of people, I'm expecting a lot of people will be watching this and finding this in days, weeks, and months, and even years to come. I'm putting this all together in one stream, from the basics to the advanced, and you can watch this back as many times as you want so you can understand how to find, how to identify coins, but then also how to navigate them on the chart. So now we've figured this all out. So what are we looking at? First off, guide to profitable trades. First off, we just found the coin. We went on CoinMarketCap or CoinGecko, we searched, and we got the basic information we needed. What's it looking like on the most basic of data? Also, where can I find to trade it? Great, we found the coin. How the hell do we trade this coin? How do I know what to do? How do I know with good confidence that I'm trading based on data that supports the direction I'm expecting this asset to go? If you're expecting it to go up, why do you feel that way? Is it just because you want it to? Or is it because there is data that supports the narrative that you're putting your money in the market towards? Let's be smarter. Let's work smarter, not harder. That's what this is all about. Trading can change your life. Investing will change your life, so long as you combine and integrate some meaningful strategies and some meaningful data in the process of what you're doing beyond your hopes and your fears. Those signals, hopes and fears, they will only leave you sending your money to somebody else that already has 2 vacation homes, that already has 3 boats. Why donate to their continued success? We need to donate and actually contribute in a meaningful way to our success. We need to build our platform, and that's through data. So what are we looking at? Well, first off, we got to look at something very, very, very simple, and that is this right here, the Wall Street cheat sheet. This is going to serve you so wonderfully if you understand this. And everything that I'm talking about applies to Bitcoin, Ethereum, all your meme coins and altcoins, Apple stock, Nvidia stock. Trading is just looking at candles on a chart, which is a map of human psychology played out over time. And through this human psychology that is mapped, that we're able to chart, we can start to see where there's divergences, where there's changes, where there's increases, decreases, and things like strength, and things like momentum, and things like buying pressure and selling pressure, and also where we're at in a trend that is setting up for a potential either reversal to the upside or a reversal to the downside. So we can catch those moves as early as possible or as risk mitigated as possible, so that we can really build in a profitable, repeatable strategy to do this over and over again. That's what this is about. That's what this is all about. Now, you have to, within this, understand who you are as a person, what your goals are, what your time horizon is, and what you're willing to endure, what you're able to endure on an emotional basis. Didn't think trading could be so emotional, did you? Didn't think investing could be so emotional. In fact, it's one of the most important components. Self-awareness and being able to respond to the chart rather than react to it, much like a relationship. The more you respond versus react, the smoother sailing you will have. So when we see this, and this is going to be true on any asset that you trade, we can understand that there are disbelief areas in the market. There's this area of hope. There's areas of this optimism. The rally is real. Belief. Everybody, this unfortunately is when most of retail or less accultured money, people that are buying and selling hope and fear, those people are, it's sad because it's so easy to mitigate that and take it, I don't want to say take advantage of, but utilize those errors in your profitable strategy. Because this is when retail really comes in. And I'm going to show you some data that you can find as well on how to identify that, oh, this is where dumb money's buying. Oh, this is where smart money's buying. Oh my God. Okay, smart money's selling. Maybe I should follow their lead or use it at minimum as a signal to start adjusting what your exit strategy is going to be. If you don't want to ride something, basically doing a round trip, meaning buying here, riding this up. Hey, you got a good entry, but what's the point of this if you ride this up and then ride it all the way back down and then sell here? This is just an emotional roller coaster that served nothing other than take away your spirit. And that's not what we're here for. We're here to make money. We're here to change our future. We're here to really utilize the tools at our disposal to really take advantage of what the world is giving us. You're here, you're watching this. So it's up to you now to deploy some of these things, these tips, these secrets, these strategies in your own trading environment and your own trading strategies so that we can do this together. So when you understand this, you have a low, you have this expansion that starts to come up, a little bit of basically rising accumulation. And then it just all, basically breaks through this wall. And then you get this hype cycle, boom, all the way up into belief, thrill, euphoria. And at this point, we have the market collapse. And not only does it collapse, it gave signals. Even if you missed an exit here, we have all of this low, higher low, higher low, much higher low. We're seeing an expansion here. The momentum to the upside has increased. And then a much larger expansion here. But then what happens is we get this low, a really big sell-off, and that doesn't, I wouldn't necessarily exit my positions here. We see this low followed by a lower high. So how you see all these highs, higher high, higher high, higher high, much higher high, and then like an explosive blow off top, higher high. And then on this breakdown, it's followed by a lower high. That could be a leading signal, which we're going to go over here in just a second. But then we get this complacency. We just need to cool off for the next rally, only to end up holding the bag. And then there's drops, anxiety. Should I sell? Oh, denial. No, it's got to go back up. Oh, finally, I'm going to sell. And the problem with this panic selling, this fear that is pervasive in the whatever asset that you're in, this is when smart money is buying again. So you have all of this, and this tends to be when people buy, and this tends to be when people sell. So I'm going to help you prevent that so that we can navigate this market rather than be navigated by this market. Make sure you get involved, you're subscribing, you're getting involved in our Discord. The link is pinned in the top of the live chat over there. You can also see on the stream right below here, if you click on more, there's a bunch of the links here that you're going to want to participate in. Get involved with our Discover Investments Group Discord. We got Joshua, Jake, DZ, TJ, Drew from Blockchain Basement, myself, doing content, doing education, doing member streams, all this regularly in there. And you can trade with us on our trusted partners over here at Blowfin and LBank. Sign up through those links right there. And you not only helping the channel, but you're also getting involved with what we're doing. Now let's go through what we want to go through because we talked about this market cycle. So then we get over to the technical analysis. That's what this is all about. To make smart buys and smart sell decisions, you have to have some assessment of where we're at in a market cycle of the asset that you're in. And then you also need to understand certain assets correlate over a period of time with other assets. Altcoins, the altcoin market isn't just going to rocket up if Bitcoin's doing nothing. Similarly, Bitcoin's not going to rocket up if there's a massive amount of liquidity coming out of the markets. Like when we look at the global liquidity, you'll see on my Twitter page, which is right here at Kelly Kellam. If you found this video somewhere else, make sure you're following me here. I'm breaking down charts and signals and things on here on a daily basis, just over and over and over, keeping people in the know of what's going on, what we're doing, why we're doing it. And there's some humor in there as well. But we break this all down. I break a lot of free content down. There's a lot more in the Discord and over at BitLab Academy. But when we're looking at the market cycle and we understand this, then we can get over to actually looking at the chart and chart something out. So how do you get to this? Now, this has a lot more explanation on it. And I do this for the posts that I do, for the educational material I do. But this helps illuminate kind of what I'm talking about by looking at the chart and understanding in the context of not only the market cycle, but the context of what's going on the global stage as well, paired with your technical analysis, gives you great insight as to what's happening, because the more you're able to combine and investigate and analyze and mark these over a period of time, especially the longer you do this, then you start seeing patterns. You start seeing how certain things are correlated with certain other things. You start understanding this idea of buy the rumor, sell the news. Too many people, they see like a big news story and they buy the day that news story is happening. Like for instance, the ETFs, the Bitcoin ETFs, one of the most monumental changes in Bitcoin in its history in terms of its access points and it's sort of entering the world stage, the biggest asset managers in the world getting involved. And this was telegraphed way back here. This is when they went live. And will we get a sell-off? Buy the rumor. This is the applications in with people, associations like BlackRock, the largest asset manager in history, Fidelity, Van Eck, Bitwise, 21 shares. All of this, people were buying the hope here. And then on the day that they went live, we ended up getting about a 14-day sell-off. And unfortunately, there's people that bought here and sold here. In my opinion, if you're going to be buying into this, then look for a dip after the news happens. Tip number one, look for a dip on a buy the rumor, sell the news. If you're in a strong bullish trend, which we're going to talk about in a second, and you see something like this, on this case, incredibly positive fundamental news, this would have been a dip buying opportunity for me, meaning the price pulls back. Okay, most monumental news ever. Some people took profits out after this buy the rumor speculative pump. Boom, great opportunity there. Similarly, we also see a couple other things that I'm going to outline here. If you're looking at this chart, I want you all to promise me, do me a favor, do yourself a favor. Whenever you see a chart, don't look at it and go, oh, okay, I don't get it. Or, oh yeah, I'm looking at the target. It's cool. It's going here to the astronaut zone. That's not how to look at a chart. Look at the chart. What is on the chart? Okay, we got Bitcoin, US dollar, 1 day. So this is a 1 day chart. Now, does that mean this whole thing is 1 day? No. 1 day, 1D means every individual candle here is 1 day. And this goes back all the way, and I'm aware of this just because I know the market. This goes all the way back here to these tops in 2021. Now, we've got a couple things on here that I'm going to show you how to do yourself. And that is, what is this trend line? This is known as a trend line that goes from this top to this top, that if you just project this out, look at where we had trouble this cycle when we pushed up to $109,000. And then we tried it again, 109, 107,000, whatever that was here. And then it rejected. Where did it go? Previous range high. We're going to talk about that here in a second. And then it pushed back up. Where to? Right back to the trend line. So what does this mean? And by the way, I got some key things I'm going to go over and show you and break down for you here in just a few minutes. Some of these charts, some of these secret tools that you can use to identify, especially on a macro trend, where we're at, where to buy, the strength of the trend, all these and more. So what is up? First up, we got to talk about trends. This is the easiest part, most fundamental thing within technical analysis, and yet people get this wrong. They do not understand it. So let's back it off. We're going to talk about trend strength, and what goes into finding trend strength. It's not just the RSI, the relative strength index, but trend strength, identifying signals and the ingredients that are identifying not bias, but several different things that are either in agreement or in discord or in disagreement with a trend setup to either continue, slow down, or reverse. Then, of course, a trigger to take a trade, and of course, your risk management within that. So let's talk about this. We're breaking it down to basics. Now, before we look into this, I'm going to give you a very quick, and I've done this before, but I want to break this all down for you. So stick with us here. Even if you know some of this stuff, do yourself a favor and just get this refresher. If you're new, well, then you're getting all of this gold here in one video. And if you want to go deeper, join us in our Discord. The links are down below in the description below this. Go and join us because we break this down in depth. Now, first things first, this is TradingView, tradingview.com. Okay, now what do we see here? We got the asset right here, symbol search. We have the time, which means if you're looking at candles, in this case, we see these candles. Let's go ahead and remove all drawings. Remove drawings. Oops, I don't want to do that. Come over here. Okay, we got that. I want to remove indicators. There we go. So each one of this is D, 1 day, 1 day, 1 day, 1 day, 1 day, 1 day, 1 day. These are all candles or 1 day. Now, if you want to change that and you want to look at 2 minutes, then every candle is 2 minutes. When you're looking into any chart on crypto Twitter, in a news article, anywhere on crypto YouTube, you can look up here, the asset it's paired with. So this is Bitcoin priced in US dollars, and this is 2, which is a 2-minute candle. If you see, for instance, let's say 2 hours, then that will say 2H. Each candle is 2 hours. This is important because it gives you context of what chart you're seeing and the time frame that you're looking at, okay? So now we have daily and 2 hour because I just changed this, but as you'll see on the way I chart on a daily basis, I usually have a bunch of time frames up here to quickly go between. But you see D, you see the little arrow. Now you'll see the stars if you look on the right. So what I like to have quite a number of things because I trade on different time frames with different reasons. So let's get the 1 minute up there, and you see how that pops up here. It's basically a quick favorite. Let's get the let's see, 1 minute. Let's get the 15 minute. Let's actually do 3 minute, 15 minute. We're doing 1 hour, 4 hour, 8 hour. We got the, okay, one day. Let's do 3 day. Let's do a week. Let's do a month. There we go. So now you see I've got quick way to quickly go between the different times. Cool. Now we have this next one. We got the candles. What kind of candles we're looking at? These are the traditional candles, and you have a little arrow here. This is just candles. You can also add Fibonacci candles, which kind of helps people, especially when you're new, but it's also good on an advanced level because it gives you more of a volume weighted candle. And it also very easily shows you, are you in a bullish trend or bearish trend on these small periods of time. So that's how you do that. You can also put it on a line chart if you want to just cut out all the noise and where the candle close every time. Now, one thing I kind of want to backtrack on just for a moment is coming back and realizing that every one of these things we talked about, candles. I know this is basic, but stick with me. You have 4 points of data on every candle. You have the open on a bullish candle, which are candles that go up. The open is here because the candle went up, right? This is the open. This is the close. Now on a bearish candle, this is the open. This is the close. And then you have these things some people call shadows. Some people call wicks. This is the candle opened here. And during this 8 hour period, while this candle is still open, while it's still being, it's got, it was that 2 minutes left on this candle. So this candle is about to close. So the candle will likely close somewhere in this area. But during the lifetime of this 8 hour period for this candle, the price action moved all the way up here, came back down, and came all the way down here and came back up. So it shows you the amount of price that moved during that candle's lifespan. Similarly, if we're looking at a 1 hour, so this candle opened here and it went all the way up here and came back down. Why the hell would they show us this? This all gives us data. This tells us that the bulls, the people that were expecting price to go up, the buying pressure took it all the way up here, and the bears dominated this and brought it all the way back here. Now, the bulls still dominated this candle because it did remain bullish, but this shows a lot of momentum, an attempt at a lot of momentum with the price movement up, but the bears started to take control. So the bullish momentum was starting to wane, was starting to decrease. If the bullish momentum is starting to decrease, that means the bearish momentum is starting to pick up some steam. It's starting to gain some strength. And then you can see this by like small bullish momentum, a lot of bullish momentum. Now it's getting weak. Now it's getting very weak. Now it's getting like, this is neutral. So I went from strong bullish momentum to neutral. Unless something changes, this signals to me, this is likely setting up a reversal, which we're going to talk about here in just a little bit. We got a lot of people tuned in right now. We're doing a little bit of a refresher breakdown, a beginner's guide, but also all you OGs, all you pros, sometimes you forget some of these fundamentals, and we are at a critical juncture in the changing of the guard of the global financial structure. We are in this asset class with Bitcoin and altcoins and what's happening, the retooling of the financial sector. So let's make sure we understand how to read these charts so that we can take advantage of the movements, the entries, and the exits in the most profitable way. So now we know what a candle is. Now we know how to set up all of these up here. If you, we're going to show how to save in a second, but a couple quick tips really quick before we get into trends. You don't need to come over here to this toolbar all the time. There's a couple key things you can do. We're going to talk about horizontal lines. If you're on a PC, it's Option H. If you're on a Mac, sorry, if you're on a Mac, it's Option H. If you're on a PC, it's Alt H. You can automatically do a trend line, so you don't have to come over here every time. If you want to do a horizontal ray, so it doesn't go all the way across your screen, you do Option J. If you're on PC, it's Alt J. If you want to do a vertical line, this is all going to be needed if you're doing charts and analysis. Option V for a vertical line, or Alt V if you're on a PC. We're going to be using Fibonacci's for retracements and extensions. That is Option F, nothing happens, but then click on the chart, move your mouse, click on the chart again. Then you automatically have a Fibonacci. If you're on a PC, it's Alt F. Those are the main, and then a trend line that you want to draw. Option T, nothing happens, but then you click on the chart, move your mouse. There you go. If you're on PC, it's Alt T. Now let's go ahead, Command Z, Command Z, Command Z, Command Z. We're deleting all that. Now let's get into identifying these. How do we identify what trend we're in? It's very, very mind-numbingly easy. And if you don't know what it is, and this is important, even if you think you do, because this is where people mess up. Let's come over here to a 3-day chart, meaning every candle is 3 days. Because you can see here, the date is on the bottom. You can see the date as I move my mouse around on the bottom. And as I move my mouse around, the price on the right. I know this is some simple stuff. People forget. This is today, right? A 3-day candle, including today. And you put your mouse over here. Well, how far back is this? Well, look at the bottom. This top here was right about on the inauguration day. So you're seeing this trend. So now if you're looking at this, what trend is this? Well, identify. Are there higher lows followed by also higher highs? Well, I see here a higher low, kind of a same low, but then higher low, higher low, higher low. So this is a very strong macro uptrend. Now, this is where people mess this up. This is the market cycle. And what people don't realize is there's not just one market cycle. There can be a market cycle on the different time frames you're looking at. So while we're looking here at a midterm macro, meaning a longer period of time uptrend, we can also see, even right here, this is a full market cycle in the shorter term, the near term. You have a low, you have this, look at this. We have this low that pushes up and then breaks down. What do we see over on the chart? We have the low, pushes up, distribution top. The bulls are losing their strength. They cannot take it any higher, and then it breaks down. So this was a full market cycle, back into this. We need to understand the time frame we're on. Now, the trick here is to realize that the dominant trend is going to be the macro trend until the macro trend changes. The macro trend here on Bitcoin is to the upside. I don't know why I can't draw an arrow lately for some reason. But the macro trend here is to the upside. We have higher highs and we also have higher lows all the way up here. Okay. So generally speaking, I didn't mean that as a trend line. Generally speaking, this is moving to the upside. Now within this, you see what I just did. I draw from the low to this low, to this low, to this low. We generally have an area of interest where price action is returning to and giving opportunity if you believe that this is still moving to the upside. So currently speaking, this is moving very strong to the upside. The price action got a little exuberant here in terms of the momentum here and then stronger bullish momentum, but it came back to the trend line, which proved to be an amazing opportunity. Now, why is this a good opportunity? Because what I like to look for when I'm watching trends, when I'm looking at price action respond to trend lines and trend signals, is I like to see, as we drew a rising level of support on the way up. As this comes down, one of the things I like to do is key areas where we see these areas essentially have reversals. We can draw that horizontal ray there, meaning this is resistance where price butted its head up against the wall here, and on the way up, this came up. You always want to look for an area of interest, potential reversal or potential bounce. So this came up, reversed, this came down, bounced. Now we have this next one. As this pushed up, you draw a trend line from where that's at, where this reversed, boom, right here. So as the price action was working its way to the downside, you see an intersection of a horizontal, meaning just flat, level of resistance here as it intersected perfectly with this rising level of support here, giving a pretty key zone of interest for a potential strength in price action buying coming in there. And what do we see? Quick washout, boom, and then launch. Now this came back down, boom, oh my God. Oh, what we have to do here, horizontal level of resistance right here, right where this rejected. Now as the price explodes up, as it comes down, do we have any barriers to further downside? Do we have any support? That's what these are called, these levels below price action when it comes back to it, levels of support. Okay, this was previous resistance, now turns into support. So we have this rising level of support and this horizontal level of support where price action remembers previously there's going to be areas of interest in this zone. So now, similarly, we have this area of resistance here that as this pushes up, it's having some trouble here. Okay. We expect this even right here. Look, previous resistance comes up, rejects, comes right back up, rejects. The bulls are in charge because what? This is on the 3-day. Well, let's get down to the 8-hour. Let's get down to the 8-hour. On the 8-hour, we've got this rising level of support here where the bulls are just kind of in charge in this zone. Just higher low, right? Higher low coming up. So what would give me indication that this would break to the upside? Well, that takes us to this right here. Where is it at? I lost it somewhere in here. There you go. Key patterns that you need to know. Key patterns that you need to know and learn to recognize. Because you don't want to just look for support or resistance. You want to also look for price, like this is area of resistance here. See at this zone where it rejects. You also want to see how the price action may be setting up a story for a shift in narrative from bulls to bears. And what do we see here? Price action pushes up and pulls back. This is not bearish at this time for a potential bearish reversal. But when the bulls try again, now the bulls can't get past the previous high. Similarly, the bears breaking down. Okay, bounces. This just could be a relief rally before continuation of the downside. But what do you see? A rally, but then it comes back down and the bears don't have the strength to push the price further down. Now the bulls are defending this area, which is clear support. So on this zone, you have what we call a W formation or a double bottom, boom, boom, boom. So you look for this neckline right here at the point at which this reversed. And if price pushes up to this and is able to break through, then you have a setup for this reversal. Other ones, we have the triple bottom. We have the inverted head and shoulders, which is similar, to a triple bottom, but it is the bounce. And then the bears do take it it's almost like a diabolical bear trap where the bears try more, the bulls kind of lose, but then they try again and the bulls take back over. So the shifting winds of bearishness to bullishness starts to, and you look for right here on this neckline, the break of that neckline. Everybody wants to catch it here. That's not risk mitigated. This is just taking a lottery shot. On this pattern, you see, and you have a clear area of where you can enter. So when we come back and we look at this, okay, we have rising levels, but is there any other pattern at play? Well, to me, we kind of got something that, because nothing's going to be exact all the time. When we see this exact pattern, but we also see, the triple bottom pattern, this general structure is telling you a story. So when you look, it's never always perfect. But when you look here, we have the rising level. We have this level of resistance here, but then you also have, let me get my marker here, right here, brush. We have this, essentially kind of a shoulder, kind of a head, kind of a shoulder. So we kind of have that set up. If you want to look at it in a larger picture, we also have this shape here. So we have kind of different angles of ways where the bears were trying, but the bulls came back in charge. So then what do? We have the rising level of support. We have the horizontal level of resistance that's now acting as support. Then we look to other data. So we come over here, up here at the top, indicators. We go to RSI, Relative Strength Index. If you put a star on it, then it will be listed in your favorite, so you don't have to type it every time. But let's type RSI, Relative Strength Index. And so what do we see here? Well, now we have the relative strength of the asset while also looking at the price. So what I would like to see is the lows and the highs. How do they relate to what's happening in the price action? Well, we're starting to see, this really big dip here, and then the strength kind of comes in here a little bit higher. We're on the 8 hour. Let's go to the daily. Coming back over here. So what we're watching is the lows on the price action and the lows on the RSI. Essentially, this is the outline of what we're looking for. On any asset, it could be any asset you trade. Bullish divergence, AKA a signal, strength is suggesting before it happens that the bulls want to send this price higher. The bears are too weak. Bearish divergence is the signal showing the bulls are losing weakness and the bears are very likely about to take control and basically reverse the price back to the downside. Understanding these bullish divergence or hidden bullish divergence or bearish divergence and hidden bearish divergence. On bulls, you're looking at the low side, basically where the lows are on RSI or it could be MACD, it could be money flow, but the lows of that signal as it relates to the lows of the price action. On bears, it's the high side that you're looking at. So when we come back over here and we see the lows right here where this is much lower, see this, how it goes lower? And what do you notice on the RSI? It goes higher. This is so much of a useful tool that you need to absolutely master this. It saved a hell of a lot of people a lot of problems back here. Look at this, 2021 on the way up. A couple key things. Yes, this is a bull trend, but what we're looking at is a combination of identifying the trend, identifying the strength, AKA the strength of that trend, the momentum of that trend. How is it changing? How is it growing or shrinking? And in this case, we have a large move. It's a bullish trend, but now it's getting much more bullish because the angle of attack, the strength, the momentum is getting faster because this is starting to shape to the upside. So this is getting very exciting. But then what do we see? What's the next move? This move has got smaller. This move, look at this. It's not nearly as tall as the one before. So the bulls are starting to lose momentum. Now we have another signal. Yes, we're in a bull trend, but our goal is to catch the changing of these trends. So the trend is expanding to the upside. It's starting to slow down. Are there any other signals? Well, what did we just talk about? The strength, how the strength and the momentum is ebbing and flowing and changing and giving us front-running signal to what move may be changing, what reversal may be in play, what continuation may be in play. Do we add to a trade? Do we start to subtract and take profits out? Do we need to look for a market cycle top? So in this case right here, this is expanding into, this parabolic move to the upside. So is it going to continue? Well, we know the momentum started signaling right here that it got a little bit smaller. But what do we also see? We see the strength. Boom. Look at that. Lower highs. While right here, this is higher highs. Bearish divergence, potential reversal to the downside. Now, does it mean it's going to reverse immediately? No. It means that this case, this is suggesting there's weakness coming in. And then what do we see? Now you have a whole nother pattern that came in just following that right here, where you have the strong parabolic uptrend. You have the momentum, the smaller move this time, and the bearish divergence signaling weakness. But then you also have that other signal right here, which is a rounding top. That is this right here. Rounding tops do not suggest, more often than not, do not suggest bullish continuation. So we had the momentum, we had the bearish divergence, we also had the rounding top, and there's another signal that I like to use because it tells you where the money flow, the action goes. And so if you type in money flow, I like to use the Chaikin money flow. We can see right here, at the same time, the strength was getting weaker as price was going up. All of a sudden, you're telling me we're expecting it to continue going up. But during this entire time right here, I'm expecting it to break out again. There's less money coming in. You can use data to absolutely give you front-running signal that you can use to not only risk mitigate to get out of a trade, but also know when to enter. So this is the previous cycle. So where are we at right now? And again, wherever you're at, whether it's today, 3 months from now, 3 years from now, this is going to play out over and over. So when we see, like, we want this price to go up. Now, if you're watching this later, I don't know what's going to happen. We are pushing our head up against this wall at about this 106,000 level, all the way up to 100, right here. We did break through it, bear trap. But is this going to continue to the upside or downside? Well, in this case, we have a little bit of a hard signal because we've got the price action is just a little bit higher here. It's basically flat, but it's just a little bit higher here. If you can see this from this point right here to that point right there. And at the same time frame, we have a bit of a bearish divergence. There's a little bit of an uncertain zone. So while we're using technical analysis to identify these shifts in trends, it's never going to be perfect. Because at the same time, we're seeing some weakness come in here. We also know that we have the fundamental growth in the background with what we're seeing in the move with the current administration paving the way forward, clearing the path forward for the crypto ecosystem and the race towards stacking. But looking at this just as it is, just on a chart basis, this looks like it wants to take at least at minimum a move, a swing to the downside. Why? We have bearish divergence. We have money flows kind of hindered right now. If you're watching this today, we also have some conflicts going on that are bringing some uncertainty. We also have the tariff uncertainty, but we also have the timeline on that in the next 2 weeks when some of that is going to start to coming back to start to be resolved. So if you've been watching me live on BitLab Academy, which if you're not, make sure you're subscribing down below, hit the like, get involved. We've got an incredible community. I've been talking, although this is super bullish in terms of if we just look at this right here, if we just look at this, it's a bull flag, right? Maybe, but we also have the other data at play that is a bearish divergence. And then of course, some other key signals, which are, essentially the CME futures gap. There's a lot of different stuff. I can't cover everything in today's video, but the short-term holder cost basis, long-term holder cost basis, realize all these things. So this is very important. Feels bullish, but there's a bearish signal. So what do you do? Well, you use some other tools. So let's click on this. Let's use something called a fib tool, Fibonacci. It's the math of how all nature is organized, discovered and sort of identified by a famous mathematician years and years and years ago, hundreds of years ago, named Fibonacci. And you can use this and you measure. You use Alt F if you're on PC, Option F if you're on Mac. You come up here, or you can come over here to the left side, the 1, 2, third tool down. If you want to see where this might retrace to, meaning pull back, You draw from the bottom to the top, and it gives you a general roadmap. Now, that's not the exact signal. You utilize this now in conjunction with does this 382, does this correspond with price action that's had trouble also, reinforcing that zone. Similarly, the golden pocket, the area I love to look for also is, does this correspond? Look at how this perfectly corresponds. If this drops straight down, we have the rising level of support. We have this horizontal from the golden pocket as well as perfectly in line with where this area rejected right here. So we have some strength at these two zones. This is important because so many people are expecting up and don't ever look down, or expecting down and never look up, that they get caught in the emotional wish-wash whirlpool of emotions rather than already having an action plan. Now, mapping this out does not mean the price is going there. It means if it does, I have levels to watch that if I am expecting on a macro level that this is going to continue up, but there may be a washout, I can get some limit orders in my exchange saying if price comes to here, do a buy. If price comes to here, do a buy. That's what we're doing. Now, for projecting where this is going to go from here, you can use the Fibonacci in the opposite direction. You can measure here, option F, alt F if you're on PC, from the top, measure this to the bottom, and look at this. On this way to the bottom, this gave us a level, areas to watch. Now, this sliced right through the 382. It went up right into the golden pocket, a typical area price can reverse from. And what did it do? Some people took profits at the golden pocket. The golden ratio, 618, 0.618. Same ratio that's used that flowers are organized. The flower petals are perfect. The way tree branches, I mean, the law of nature. That's what this is. But why would this work in charts? Because humans are part of nature. It's just the way everything works. Maybe we are living in a simulation. So what happens? Some people de-risked here. And it's not only the golden pocket, but look, we had all this chop here. So price action came up into a level where there was a lot of chop, and it happened to be the golden pocket. Some de-risking, bulls were in charge, boom, sliced right through it. Now this one sliced through the 7862, found some support, came up, finding support. Now if this is lost, then I'm watching this, these zones right below us. But what I'm more looking at here is, because we just talked about the downside, let's talk about the upside. From this measured move, you can have fib extensions, which are to the upside. And if you want to know how to do that, once you have the fib open, you can just click on like right there and then double click, and you can take a screenshot of this. You can add some of these. It doesn't matter what order they're in. They will automatically put them in the right order. But the 382, the 0.618, the 0.65, and the 0.618 is what gives you that golden pocket. The 1.618, which is an extension of where price can likely extend onto, the 2.618, the 3.618. These are these price extensions of where price can go based on, it's like a weather forecast, essentially, of where these are likely go. And they hit pretty regularly. So this gives you these ideas. So what we covered is, so far, the market cycle, right? Where we're at in the market cycle, right? This is two different ways to look at these same two things, but this is a market cycle. This is the market cycle mapped out in the emotions in this spiral chart from the rational root. And the next stage is the thrill stage if things play out like they have before. And there's no reason to believe that they won't, because we've seen this over and over on a regular basis with Bitcoin based on the halving cycle. That's a whole nother video we can get into. But we are essentially, this is the area of which we've traveled since the halving, right? And there's more room to go. Look at this. The most explosive part was there. In this case, this was the earliest part of the cycle, but we just had Bitcoin and the crypto ecosystem, digital assets, all enter the world stage in an empowered way with the federal government here in the US. Okay, with BlackRock, with Fidelity, with JP Morgan, with MasterCard. Everybody's getting involved now. This is opportunity zone. So understanding that this kind of reinforces this idea that we are going to likely be somewhere in this zone here. Oh wait, this right into this zone, right? Because this is what this map says. But because this map says, and because you may assess it's thrill next, do not forget to look for downside risks, to take advantage of those as they come. Now, some of the things we can utilize is the knowledge of on-chain data. Even if you're trading only alts, understand on-chain data, especially for Bitcoin, because this will give you the leading signal for your assets. Because we talked about identifying the trend on the chart, but this on-chain data will give you such an insight into where you're a dumbass and where you're being smart. Yeah, I said it. I don't apologize for the language because we got to hold ourselves accountable. Long-term holder supply, people that are more patient, people that are getting rich. This is how, is their supply increasing or decreasing? AKA, have they been stacking in and buying, or are they selling? Most basic picture here. Now look at this. This is where retail usually enters because they don't believe it down here. They need to wait for news media and Jim Cramer. Blah, blah, blah. This is exciting. Let me buy a top. Oh no, Bitcoin's a scam. No, our lack of strategy is a scam. You can see this smart money that's going to be holding for a long period of time. Smart money's buying into the weakness of dumb money, retail capitulating here. They're lowering their supply while smart money is buying into that. And look at that, peaking right here at the bottom. Their supply peaked. And then what happens? You get a little, oscillations here and there. But right here, where does this happen? Right at the previous, right here. Look, okay, so you can see the mouse go across the screen. Right where the price butts up against the previous all-time high. As this started moving to the upside, that's where long-term holders took profits into the strength of this trend. Now, what happened here? Same thing. Right when we broke previous all-time high, right here, this is also where we saw a huge amount of long-term holder supply decrease. So you get this weaker top with weaker hands. Now, the question is going to be this cycle, is it different? Because now we have corporate strategies getting involved, Bitcoin strategies getting involved, governments getting involved. It might be different, but it hasn't been different yet. So let's pay attention to this because we are seeing some interesting behavior here. So what else do we look at? No one signal is the only signal you should look at. You can look at the leveraged players out there. In this case, we're talking about the bullish trend, right? Bullish trend. So on this bullish trend, when we're getting these washouts, these green bars above are showing when there's a lot of people that are betting leverage long. They're betting leverage long on derivatives. And then what do we get? We're getting these little sell-offs, okay? Well, when everybody's going leverage, all of a sudden flips. There's a lot of bullish sentiment. And for a short period of time, that sentiment flips bearish. That on a near term, for those trading the small time frames, that was an excellent signal here to take a bit of a rip to the upside, because when everybody flips bearish in a bullish trend, boom, great opportunity. What happens here? People are starting to flip bearish in a bullish trend, massive opportunity. Okay, happened again, even right here on these small little rips. See right here, right in that zone, little rip to the upside. Now, I'm not saying use this only, but you use this to reinforce your, or add to your ingredients of what you're looking at in the market. But then there's something very simple, short-term holder cost basis. The average price of every coin that has moved, if anybody bought, sold, traded a coin and it has been held for less than 155 days, that's a short-term held coin. And it's the average price of all those coins. Now you notice, let's go right here. You notice in the bull trend, once we broke above this orange line, found support. It was a great area for entry all the way up until the landscape changed. So let's refresh this and look at where we're at today. And I want you, and you can find this one free at bitcoinmagazinepro.com. Come there, free. You don't even need to make an account. I suggest you do. But bitcoinmagazinepro.com, you come up here, you click on charts, go to Bitcoin charts, and then you just search short-term holder or STH cost basis. You can search either one of those. And so when we look at where we're at right now, I want to go from the last cycle to where we're at right now. So look, found support up. Oh, we lost it. This is the interesting phase that we had right here, but still bull trend, found support, launched. But then this is where the bear trend happened. We lost short-term holder support, rejection, until ultimately, look, came back above it, was opportunity, troubling opportunity here, but great opportunity. And we're kind of sitting right at that cusp again, where the short-term holder cost basis is right now about $96,000, $98,000. Similar to what we were talking about a second ago when we were talking about a potential pullback. And look at that. The golden pocket on this move that just happened is right at $96,000, $97,000. We just talked about the short-term holder cost basis also potentially being a support area right there. Amazing. But then we also have the short-term holder MVRV, which I've covered before. And these are the separations of the price action that you're actually trading on the chart in relationship. Is it moving very fast away from the short-term holder average? This is what this move to the upside is. And this is marked tops when this has gotten into this red zone. Some of them are short-term tops, but this, I mean, look at this. This is that massive top at $19,000. We got that huge explosion, that euphoric blow off top to the upside. And this peak, we also tapped this area. Both, I mean, look at this. We kind of got foreshadowing here on this double peak, giving you, so my point here is you use the various different tools to get slightly different looks to either help you move towards a narrative action in the market, or move away from it. Because if you're getting a bunch of conflicting signals, get out of it, like stay still, don't do much. But when we're seeing this, like right here, we've never gotten anything, any large movement up anywhere near this like we've seen in all the previous cycles. In fact, this to me looks like what we're seeing back here in 2016, preceding the macro, the absolute bull rippage to the upside. Now we'll have to see how this plays out. But these types of things, comparing different cycles and different trends and where you're at in the trend, helps you identify what you may or may not do. Now, we talked about long-term holder supply. We can also see the address balances. This is the same thing as supply. So you're kind of seeing this roll off into the top, the roll off into the top. We can look at different addresses doing what, when, where, and why to identify what's happening. Are we near a top? We've talked about this. Another free chart. If you go over to bitcoinmagazinepro.com, type in VDD, and like once you click charts and Bitcoin charts, type in VDD and you'll get this chart. This just shows you a great metric of if a lot of old coins are moving. This is another way to look at this signal. Where is it at? This signal right here, long-term holder supply. It's another way to look at that in a more pretty way. Obviously, it's slightly different. What it does is when this is spiking, it means a lot of old coins, and a lot of coins in general are basically being moved. If a coin's being held 10 years, every day for one Bitcoin is one value day. So if you say you have 10,000 Bitcoin and you've been holding them for 10 years and you take profits on half of those, that would be a massive spike, or add to a massive spike in this, because that's every coin for every day it's held for 10 years would be a coin day. And when you trade it to a new hand, all those coin days are destroyed, meaning it's a speculative metric that shows you when a lot of coins that have been held are moving, bringing in weakness, perceived weakness into the market. Great, easy tool. When you get these areas of green, it's generally a good area to be following, simplified way to follow the trend of smart money. Smart money is not selling. They're, for the most part, basically, acquiring into these zones. Great, just general buy zone. But if you want to really get granular, the best buy zone, where is that other chart? 1 second. I want to come right here. Favorites, long-term holder realized price. You're really trying to identify the bottom. You really want to identify best macro zones each 4-year cycle to buy. When the price action comes down anywhere near, I wouldn't say you have to wait for this to drop below this area. When the price action gets near the long-term holder realized price, AKA the coins and wallets that people are accumulating long-term, see how it kind of goes up into this zone? It's because a lot of long-term holder coins have they've taken some profits into here, and then now short-term holder coins then matriculate into being long-term held coins by being held past 155 days. are starting to become a long-term holder wallet that is identified. So this is moving up at a slower pace in the price, moving up at a slower pace in the short-term holder cost base, short-term holder realized price. So this, when price action comes down into this area of this yellow line or below it, dream buy opportunity of each cycle, dream buy opportunity of this cycle. Look at this. The COVID crash set up for people looking at on-chain data. Man, that's a hell of a great buy opportunity. Look at this. Came down. All of this was a great opportunity at $20,000 range. Nobody knew FTX was going to collapse, but then all of this great accumulation, this is why you break out your buys over a period of time, especially if you're going to be on the investor side, especially if you're new. But then boom, look, we got the FTX collapse, boom, very short period of time under the short-term, long-term holder cost basis. And then great signal. Now, where is it going to top out? We talked about the value days, obviously signaling something, but also the pi cycle top indicator. We'll see if this continues to persist, but the last two cycles have proven a great opportunity with these two moving averages, which you can scroll down on this. It shows you these two moving averages, 350-day moving average and the 350-day moving average times 2. When these, the 111-day moving average, we see these basically converge, marked perfect top. We are so far away on this. Now, this may or may not work. My point with this is, when you're utilizing a signal, whether it's RSI, whether it's money flow, whether it's the MACD, whether it's even a pattern on a chart, look to the trend on the macro. That's your dominant trend. From your dominant trend, you set your main levels of support and resistance. Now you go into your midterm or small time frame trend, smaller market cycle essentially. And if a small bearish trend in the middle of a macro trend comes down to a macro support level, when you're looking at this, you've identified from these 2 points forward, a macro bullish trend. When this comes down into this macro levels of resistance, looking for support if it were to come down. Okay, resistance, looking for support, especially when you have two trend lines coming into this. When this is pushing up into the previous resistance, watch for a little bit of slowdown on that momentum to the upside. But note that this was found support on key levels. The narrative around this asset in particular, when this was happening, was only getting more bullish. We not only had the breakdown into this, we had the pattern. Again, you could take a screenshot of this, screenshot this and save it. It gives you a general idea of what things are going to do. And then you're looking at the other macro data, the other things that are going on in the cycle to help you get a cultured identity for to identify what is going on. So now, when you're doing all this, if we get down, let's say in the 15-minute chart, okay, we got something here. What is it? Well, first things first, we're going to be closing out here soon. We know we're in a macro trend because we've just been talking about it. We know we're in a midterm or short time frame on the 4-hour here. We know that we've been in a bit of a downtrend, or this downward. Actually, this is sideways accumulation, frustrating trend, right? So let's get to the 1 hour. We know we have support. So where might this go if it drops? Well, let's look back to the left. We've got this area right here, we have a line here. I guess is that 382. We have this line here. So this tells me of all this bounce, chop zone that we could be looking at a price action if this were to come down somewhere in this zone. And if this is lost, then you look to that next level down. That next level down is the top side of this, the next price level top, as well as that Fibonacci zone that corresponds with it. So if this breaks down, cool. Potential bounce here at 102. If it rejects, meaning rejects here and continues, then we're looking for the target right down here, $96,000 to $98,000, which we know from our other analysis that we have other signals that highlight that those are areas to watch. Now, this doesn't have to play out. The problem with this market, especially as exciting as it is, it can trick you. If this breaks down and people enter here and comes back up and enters here, this was a bear trap. And then you look for here, likely near-term bull trap find support, then move. So you want to wait for confirmation. It's not just, oh my God, it broke the line. No, wait for the line, wait for the retrace to that line if it comes. And does it show the weakness there to signal further downside? And you do that through your technical analysis with the strength, the money flow, your patterns, all of this to identify. And then the last thing I'll teach you before we wrap out, I know this has been a little bit longer. I wanted to give you all the things you need to have the basics of what's going on, is to look at what is going on with where there's free liquidity. Go to coinglass.com or go to FOMOD.io, FOMOED.io. Both incredible tools. We see liquidations, AKA, we talked about those derivatives before, people betting 10x, 20x, 30x. You can see a map here, a liquidation heat map. And if you come to coinglass.com, hold on, coinglass.com. I want to delete everything there. Just come to the page. Now see right here, liquidation heat map. Now you can see here, let's go out to the month, change the time frames, and you can see where there's been a lot of liquidity and it's scooping it in and out, but it gets a lot clearer when you get down to like the 1 week. And the brighter the light, the brighter the color you see, the more liquidity is there. That is essentially free degen liquidity, AKA as the price is getting weaker here and sentiment is starting to wane, the bears, people that are bearish, betting on downside price action, start taking shorts, leverage shorts, different size, 2x, 3x, 5x, 50x. And you start getting this amalgamation, this large amount of liquidity that these people have been betting short. If the price were to go into this zone, those shorts get liquidated and they're forced to go basically close that short by longing. Forced liquidation or either chosen liquidation because they don't want to be. AKA, if you have a bright light, the Bitcoin price is a moth to the flame. It tends to push up and seek the light. Now, the problem, what we're seeing right now, and you'll see this regularly in the market, is you get areas of sort of max confusion. Maybe it's just market makers. It doesn't matter. But you see there's liquidity on both sides. It's almost like it's a Bitcoin trap city or any asset. But when you see periods like this, it's likely also going to be very choppy in the altcoin market. So these things all work together. But this comes down, scoops liquidity, comes up, takes a little liquidity here, comes down, scoops into this liquidity, comes up. It's not quite getting there. It's can't quite go. Like the bears aren't successful taking it down. Then all of a sudden you get this bullish pop, boom, scooped up all of that liquidity, forced all those shorts closed. So one could argue that it's done that. It's been going. It's been ping-ponging back and forth. One could argue this may come down and try to scoop this liquidity down in the 102, 108. We'll have to see. Now, that's on the 1 week, though. Let's look at the 12-hour. What's going on today? Same thing we just talked about. Now you're getting it zoomed in. Okay, the bulls are not able to get up there. They also just made a little bit of a run that we know. So look, now we're getting these longs. Everybody's getting excited now. So boom, scoops up all these longs, forces the longs short. This is a dog-eat-dog world in these markets. So make sure you are being smart. Use the tools available to you. It helps you identify on the chart what your levels are. Compare those charts to the liquidation levels on charts if you're actively trading. And of course, anytime you take a trade, weigh yourself against a number of different ingredients, not just the price. The price is only one data point. Look at the price in relationship to the RSI, the money flow, or the moving average. For instance, here, if I come over here and I press V, this has things saved on here. If you want to save a chart, just do a bunch of stuff, add indicators, click these 4 squares, save indicator template. You can save it. If you put a star on it after you save it, then you get the buttons to go back and forth because you see I got my moving average and RSI. I can come over to the BitLab trading stack here automatically. The market cipher, I have them all saved in templates, so I don't have to add stuff every time. But you see here, we're seeing some weakness here on the 4-hour coming down. This has lost the moving averages. Deviation up, came back down, but now it's getting rejected. We're seeing some weakness here, but we're not seeing any clear signal. So sometimes as much as you want there to be a signal to take the trade, sometimes if you don't have a clear picture, you don't take the trade. Let's make sure that we're keeping you in the know, breaking things down. I tend to go into a lot more advanced stuff regularly. I wanted to break things back down, give a refresher, looking at a lot of different things. Remember, when you're looking at a chart, if you're about to take a trade, ask yourself what trend you're in on the macro. What's the dominant trend? What's the trend that I'm trying to trade? How does that fit into the picture of the macro trend? What are the signals I'm seeing beyond just price being exciting or scary? Where does a price look as it relates to support and resistance that you're trying to take action on? Is there increased or decreased momentum, and are you taking that into effect? And what other supporting signals beyond support and resistance, beyond RSI, what are at least two other signals that you're saying this also helps confirm and support my thesis? This will, one, help you risk mitigate the actions that you're taking, but two, it will help make sure that you're taking in the full picture of the trend. I love you guys. I appreciate you guys. Hope you all make sure if you found this video some other way, if you're not a member of the channel or here, subscriber on the channels, head over to BitLab Academy on YouTube. Give us a follow. We're breaking down charts, data, aggregating things for you so you understand how to know what's going on. Come over here, hit that subscribe button, join us, share this out with your friends. Make sure you're following me over here at Kelly Kellam, also on Twitter at Academy BitLab. I'm breaking things down for you guys on a regular basis. I'd love to see you guys also over on Rumble. That link for joining the Discord is pinned up in the top if you're watching on Rumble. If you're watching on YouTube, if you're watching on Twitter, get involved with our community. We love you guys so much. We want to make sure that you have the best data available so that you can navigate these markets yourself. I want you to win. Down days for people that are trading smart. In a macro bullish environment, down days are opportunity. Remember that. In a macro bearish environment, green days are incredible opportunities to short that rip. So understand your trend. Trend's your friend till the end. That's all we got. Get involved more in BitLab Academy. Love you guys. I'll see you in the next one. Adios.